Hi, this is Mike Burnick from Money and Markets TV. It's clear that mainstream investors these days are embracing exchange-traded funds as an easy-to-use, low-cost alternative to individual securities. In fact, the dollar volume in 3 of the top ETFs that track the S&P 500 index averaged nearly $30 billion a day last month. That was almost equal to the total trading volume in all 500 component stocks in the index combined. And soon these index tracking ETFs will likely surpass the underlying index for the first time in history in terms of volume. That may surprise some of you, but not me. I've been trading ETFs for many years, and frankly, I'm surprised this day didn't come sooner. And that's because ETFs offer several important advantages over individual stocks or actively managed mutual funds. Now, to understand these advantages, you have to realize that today, stocks are moving much more in lockstep with markets than is usual. In other words, the movement of an individual stock now depends more on broad market moves in the macroeconomy than it does on the company's individual fundamentals. So stock picking just isn't delivering the added value it used to. Now, actively managed U.S. mutual funds also carry an average expense ratio of 1.4% per year, mainly due to the much higher management fee that they charge. By contrast, ETFs have an average expense ratio of just 0.5%. And the roughly 1% higher cost for active funds is not being made up in terms of better performance. In fact, just 13% of actively managed funds are beating their benchmark indexes by enough to cover that extra management fee that they charge. ETFs are simply more convenient than mutual funds or individual stocks to own. They give you instant allocation to nearly any sector or asset class around the world with one single transaction. Plus, ETFs provide the easiest way to get your portfolio either in or out of a sector or asset class quickly. And that's a definite advantage in today's fast-moving markets. The fact is, the dominant market theme has been risk off, risk on, as investors know. Investors are yanking their money around in and out of markets en masse these days, with most asset classes either rising or falling together. Now, this higher correlation makes it even more difficult, even for experienced money managers, to keep up and earn enough excess returns to justify the higher expenses, not to mention the risk that they're taking with your money. So it's really no surprise that ETFs are quickly becoming the tail that wags the stock market dog. I'm Mike Burnick from Money and Markets TV. Thanks for watching and good investing.